All right, good morning or good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We had a few fireworks in the market early on this morning, but since then, the market's it has just gone absolutely dead. Volume's very light, not a whole lot of movement, not a whole lot of news. A little bit of Fed speak here and there. But here I'm zoomed in on a minute chart, and you can see 27.96 to 27.83, about a 16-point range on the day, which, isn't very much. And if we back this out to a 1-hour chart, put a little perspective on it, you can see what we've had. We've had a shot up here on Thursday, Friday. We had a shot down yesterday. But look, market is still in the same spot it's been the last 3 weeks. It hasn't gone anywhere. I know all of the writing out there and the talk is this market's been hugely bullish, and it has been until about the last 3 weeks. The last 3 weeks, it's just been dead flat, right? And I know that when you have a rally into a dead flat area, it makes the rally feel longer, right? When you have a sell-off and then you go dead flat, it makes the sell-off feel longer. But flat is flat. And, this has been incredibly flat. We finally got a little bit of a shot down yesterday, but, again, we looked at the metrics yesterday and we talked about it. It wasn't enough to say, hey, there's a major change going on out there. We continue to see the market just kind of churning. Just churning. And, a few stocks trading higher, pushing up and upward trends, a few stocks lower. But, the market as a whole, just pretty darn flat here for quite some time. And today is nothing different. You look at the different indexes, small caps, the IWM, same thing. You look at tech, it's a little bit stronger. Right, tech has had a little bit more of a lean up by about 1.5%, depending on where you measure it from. If you look at the Dow, it's got a little bit of lean lower, but again, you got to pull out a microscope to see it, or a magnifying glass to see it, and the reality is there's a lot of flat. That is out there in the market, and a lot of stocks have been going into compression phases. Now, earlier today, I posted a video that I did a while ago, and it talks about chart overlays and understanding consolidation versus trend, and when things are moving from consolidation into trend or trend into consolidation. And one of the things that I want to kind of make clear is that for most stocks out there, you put the overlays on them, they're moving from trend into consolidation, or they've already made that move, right? And a lot of it's kind of in the early process of that move. For example, IBM, right? And we're seeing a lot of that out there in the market. Even a Bank of America, really nice trend, right? Really had a really nice trend. And then it kind of created its reaction low, reaction high, and it's just kind of been in this consolidation phase, this compression phase. And so many of the things out there are in that mode. And it makes it a little bit a different look at things when you're trading them. It makes you have to kind of take into account that that downside risk or that compression risk. In there with the stock, and that's nothing unusual for the markets. Markets go through those periods. I don't think this will be a long compression personally. I think this will be a fairly short one. I mean, it's been 3 weeks now, meaning I think we're near the tail end of it. But obviously we will see. Some things that I'm looking at to play, something like a Caterpillar, which I'd like to play on the downside. But, one of the things I have to be very careful of is to make sure that, hey, this is ready to break out of the compression. Right, and Caterpillar's been in this compression now for about a week. Okay, today broke the 7-hour. All right, are we going to start to see the Bollinger Bands expand on the hourly chart? No, can't even get that. Right, So, all right, compression, a little more compression. Here we go. And there's just a lot of that out there, in the marketplace, here today. Now, one that's a little bit different is Halliburton. You can see Halliburton, was kind of a little bit of compression phase, but Hal doesn't typically compress for very long. But this is the hourly in the band. You can see Halliburton coming back to where it was Friday morning, and it's off its lows for the day, but pushing back and lower. This is one where we've talked about it. Yeah, it's had its kind of compression, and it's had its attempt to break out, but the lows continue to get higher here, or the highs continue to get lower here. The lows continue to get lower, and this one's doing something that does suggest further downside to come. And we see this in a few stocks out there in the market, but this is not a common picture. This is not the common chart that's out there. The common chart is Bank of America, IBM, Caterpillar. Those are the more common types of charts out there in the market here today. All right. So, again, I talked about Micron here this morning. I was looking for an entry point on it. And again, what's my big concern? My big concern is compression. We have the Bollinger Bands contracting. Are we really talking about something that's going to break down heavy, or are we talking about something that's just going into a consolidation phase? And I have to take that risk into account. And, as I looked at it this morning, for me, just that consolidation risk still a little bit too high there on that. Now, I do think there's a very interesting undertow to the market here today, and it's not one that I think is going to get discussed or a whole lot made out of, but I think it is something to be mindful of, because we've been seeing this now for about a week. Most companies have reported earnings, right? There are some that haven't, or some that are just reporting. Target reported, right? And the stock's moving, and great. This is normal, and we're going to see a few more of stragglers come in over the coming weeks. But after a company reports earnings, a lot of times it'll have a period where there'll be different conferences. An aerospace conference or a transportation conference, in different investor type conferences, and these companies, major figures in these companies, will go and they will speak. Now, a lot of times they will, not say a whole lot, that's new or different. They'll just kind of rehash a lot of the same old stuff. But from time to time, companies will use these conferences as an opportunity to, change some of the guidance on their numbers. Other times, they feel expected to give guidance, so they'll give a guidance range that's just crazy big, right? And so anything could fall in, and it's just them kind of punting, right? But we had 4 companies. We've had more, but, 4 companies that are a little bit more major here today, that have been involved with a conference and that have come out and issued forward guidance. And I don't want to go through what the guidance is, because I think for many of them the guidance is fairly neutral to slightly lower for Triple M and General Electric, but more just the reaction. Let me put on GE here and the 1-minute chart. Here's GE and the reaction to the guidance and a little bit more data. Here's Triple M. This morning, gap on down on the guidance and data, and sitting back down here. American Airlines sold off on the info. We're not talking about monster moves. UPS sold off early, has rallied on back. It's rallied on back a little bit more than FedEx. Now, one of the things about this news is generally when there's new news, there's clarity, right? You go from a period of less certainty to more certainty. And so a lot of times this type of stuff gets bought up because it's now more certain. But we're not seeing that. We're seeing a little bit of a different reaction. Is it enough to make a huge thesis on it? No. Is it enough to kind of point out and to say something else is going on here? Yeah, I think so. I think it's something that is to be watched over the coming days and over the coming weeks as more and more of these happen, and I'll be watching it. I'll kind of speak to it as it happens, but it's one where we could wake up one of these days and we have a major company that issues guidance, and all of a sudden, we'll see the market, react to it in a big way, and everyone will be like, "Wow, okay, this really drove it." Well, it'll be a culmination of a lot of little ones like this, that would possibly drive that. So I think that's probably the most interesting thing to take out of today in terms of what's kind of really happening out there. But it's not something that the market's going to be very reactive to, or is not showing any real reaction to, other than with the individual stock, at least for now. It does look like today that the bears, they came out selling a little bit early, got a piece of economic data that made them go, whoa, hold on. Okay, I gotta reassess that. So let me just back out, and we'll see what later on brings. The bulls bought it up briefly, but it's not exactly a piece of data that the bulls can point to and say, well, okay, everything's going to be different now because of this data. So it kind of has created this kind of mixed bag holding pattern, for a lot of things out there in the market. Now, I was asked about Netflix, and I'll speak to Netflix here just a little bit. Netflix is a interesting company, and obviously has had a monster run over the years, and has had this kind of a little bit of breakdown. But you can see the bands; they're contracting, right? So yes, it's pulled back a little bit, but this isn't brand new trend forming. This is going into a consolidation pattern. But Netflix here today, and in fact, let me get the exacts of this, so I'm not speaking from memory here. Here we go. So I'm just pulling it up on my other computer. Dan Niles, who works with Alpha One Capital Partners, he was on CNBC here today. And about this morning, and I believe it was somewhere about the first hour of the market. That's when I saw the reports come in. Yeah, and you can see kind of where this was, right here. But basically said that he put on a short position on Netflix recently. Okay. And, is stepping in on the short side here of Netflix. And, what's this mean? What's this have to do with anything? Well, one thing to keep in mind, when a big fund like this says that they have stepped in, that they have recently stepped in, there is a solid history to show that shortly after they announce it on TV, they actually pull their short off. You could say, is it legal? Is it right? Is it wrong? Whatever. But there is plenty of history to show that happens. That they will step in, they will speak to something on a downside, and, in the background, they'll be covering their shorts. And so, you know what? Did they put the short on last week? And, make those comments this morning, use those comments to cover their shorts, and that's putting the buy pressure on today? Could be. There's no way to prove it yet, right? We won't see it until the 13F filings and the fund filings for Alpha One Capital Partners. Okay, we can only speculate, but I bring that up not to be cynical, but to realize that does happen. We also see sometimes there's a very kind of public statement like that when a fund really thinks they're right. And they're trying to make a name for themselves on that trade. Now, Dan Niles of Alpha One, they've already made a name for themselves. But if they are right, and 8 to 12 months from now, they go back on CNBC and talk about how great their short position was, what happens to the capital inflows for their fund? they go up in a big way. If Netflix falls to 200, now they're on CNBC parading, yeah, we just covered our shorts, blah, 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 and then the stock, jumps on that news. The capital inflows into their fund are going to increase dramatically. We see these games played a lot. Sometimes it burns fund managers. Sometimes, and there are some very high-profile cases where it has sent funds spiraling into, non-existence. To have to go belly up. But that's what's going on here. That's what we're seeing happen here. It's one of those two scenarios, right? It's one of those two scenarios. Now, what should you do about it? In terms of, nothing, right? You look at it, you do your thing. You look at it in terms of your charts, your technicals, your trading methodology, and if it sets up, okay, you go with it, and if it doesn't, you don't. It's not something where you take the opinion of one person on TV running a fund that may have some different motives and different objectives and say, well, boom, this stock is going down. Because their motive, their objective may not necessarily be to really, really want the stock to go down or really analyze the stock to go down. It could have been a short-term type of thing. Normally, it's not that short-term. But, when they say very recently, it could be right back here in January, where they shorted it at 300 and now it's at 350. Right? There's all sorts of those scenarios possible, and keep that in mind. I try to stay away from a stock when we have a major player speaking to it, unless it is just doing something that I want to see. Then I'll say, okay, let me go. But I don't step in just because Warren Buffett or somebody else, steps into something or finally announces that they stepped into something. Perhaps the most memorable case for me was with Countrywide Financial. And, what was his name? Angelo Mazzillo, the CEO of Countrywide Financial. I swear he was on CNBC every single day. And, Carl and I were in the office. For those of you who remember Carl, we'd be in the office. And boom, there's Angelo Mazzillo. And he's talking about how great the company is and how solid the company is and how great the company is going to do. And just talking it up. Now, we find out weeks later that, every single day that he's talking it up, he's been selling out of the company that he is out there talking up. I know that's a CEO, that's a little bit of a different case, but, I just bring that up, just so, just basically say, be a little skeptical. Unfortunately, it's not something, you can always take and go, oh, okay, there's altruistic motives here. And so, a lot of times, unfortunately, have to be skeptical. And that is the market, right? That is the market and some of the market games that are out there. So anyway, going into the close for the challenge, Halliburton is getting close to closing below the lows from Thursday of last week. So I will be looking to add to my position going into the close. I'll be looking at Caterpillar. My problem with Caterpillar, though, is the options. If you look at Caterpillar, the options aren't bad. The March options that expire in 10 days, they're not bad. The April options are fairly priced. They're not terrible for, what they are. But I don't get the delta that I want on the April options. I get the time I need, but not the delta that I want. And if I go into the weeklies to try to get to a time frame that I normally like 24 to 31 days, 17 to 31 days, the spreads are pretty high. Now, the spreads have come down a little bit here this afternoon, but this morning these spreads were 10 to 15%. So it's one where, okay, do I want to step into one of these options? They're not overvalued, they're not overpriced, they're not inflated or any of those types of things. It's just a weird expiration here for them, and their weeklies do not have very tight spreads because the volume on them, or the open interest and the volume, is not very high on Caterpillar weekly options. So I'll have a decision to make there with that, but I would like to see Caterpillar renew a move back below the 7-hour moving average, right? So here's Caterpillar's just kind of stuck and flat here on that. I'd like to see some sort of sign that it's pulling on back here into the close, and if I get that, I may go and step in here to that before the close. But the market itself, the market vibe is still a 6. It's still neutral, and we could go and look at all the metrics, and they're pretty much unchanged today across the board. There's a little bit of strength in some of the global ETFs like the FXI, which has been leading the way here. While U.S. markets have been pretty flat over the last 3 weeks, China, no, not so flat, right? Been a lot more volatile, but not so flat. And so we see continued strength in there, and that is, but that's not changing here today. That's just continuing, here today. So, just not a lot of change in the metrics, and that suggests to me that, hey, it still comes down to individual trades, okay, is this stock doing something a little bit different, than the overall market, but the overall market's still not much to sink my teeth into to want to go after, on the call or the put side there with that. Okay. I'll make a trade decision around quarter after 1 my time, or quarter after 3 Eastern, and I'll make a decision around then, and go from there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.